Have you noticed what's happening in Calgary right now? Detached homes are edging past $800,000. Condos are up over 6% in just a year, and there's a real buzz that this city could be Canada's next big investment hotspot. But here's the question I'm hearing from clients in London, Sydney, and Los Angeles. Is this a smart move, or are we looking at another bubble ready to burst? I was chatting with one of my partners last week, a seasoned investor who's been through multiple cycles in Vancouver and Toronto. He leaned in and said, "Calgary feels like Toronto in 2009, before prices doubled." And if that's true, you're about to see why savvy investors are quietly snapping up properties here before the rest of the market catches on. In this video, I'm breaking down the real numbers, the hottest neighborhoods, and exactly why timing your move in Calgary could define your next decade of returns. Take a look at this chart. Calgary average detached home price growth, 2022 to 2025. We're going deep into what's driving this boom, who's actually making money, and whether now is the time to get in or sit this one out. Stick around, because this isn't just another market update. This is the insight you need to make the kind of decisions that separate good investors from the great ones. Why are high-end investors turning to Calgary in 2025? I've worked with investors from New York to Melbourne, and they all ask the same thing. Why Calgary? Why now? And honestly, that's the right question to ask, because timing and location are everything. And right now, Calgary is offering a rare mix of growth, stability, and opportunity that's hard to ignore. Let's break it down. Population growth driving demand. One of the most overlooked drivers in real estate is simple: population growth. And Calgary's population is surging in a way we haven't seen since the early 2000s. In 2024, Calgary grew by 2.1%, bringing its total population to 1.52 million. But here's the kicker. Much of this growth is fueled by interprovincial migration, people moving from Ontario and British Columbia in search of affordability, jobs, and a better quality of life. I had a conversation with a couple from Toronto last month. They sold their semi-detached for $1.3 million in Scarborough and bought a larger, newer detached home in Calgary for $850,000 with cash left over. And they're not alone. For context, take a look at this chart. Calgary population growth versus Toronto and Vancouver, 2020 to 2025. Even with Canada's federal immigration caps tightening down to 395,000 immigrants in 2025, Calgary continues to attract both domestic and international talent. And where people go, housing demand follows. Economic resilience beyond oil and gas. Let's be honest. 10 years ago, if you mentioned Calgary, most people thought oil and gas. But fast forward to 2025, and this city has reinvented itself. Calgary's economy is projected to grow 3.2% this year, outpacing most other major Canadian cities. A big reason? Diversification. We're seeing massive investment in tech, healthcare, renewables, and finance. Google just expanded its Canadian operations here. Amazon Web Services is hiring aggressively in downtown Calgary. And health tech startups? They're booming. Employment is strong, with a 4.1% unemployment rate and an average wage increase of 2.3% in 2024. For comparison, Toronto's unemployment is sitting at 6%, and London's job market is facing post-Brexit uncertainty. Take a look at this. Calgary employment growth by sector, 2023 versus 2025. And here's a little insider perspective. A colleague of mine, Michael, a property developer in Sydney, recently shifted a portion of his portfolio to Calgary. He said, "I've watched cities pivot successfully before. Melbourne post-2010 tech boom, Austin in the late 2000s. Calgary's got that same energy now." That's a pretty big statement from a guy who's built his career watching these trends unfold. Affordability and value proposition. Now let's talk about what really gets investors' attention. Affordability. The average home price in Calgary is $612,838. Compare that to Vancouver, $1.3 million, or Sydney, where you're looking at AUD $1.5 million for a decent home. And condos? Calgary's average condo price is $353,334, up 6.3% year over year, and still significantly cheaper than Toronto or Melbourne. It's not just the price tag, it's the return on investment. Calgary condos are offering rental yields of 4% to 5%, sometimes higher if you're targeting areas near the University District or downtown Beltline. Take a look at this chart. Rental yields comparison. Calgary versus Toronto versus Vancouver versus Sydney, 2025. A US-based client of mine bought 2 condos near the Foothills Medical Center last year for $340,000 each. After renovation and staging, he's getting $2,400 per month per unit. That's nearly 5% gross yield in a stable, appreciating market. The interest rate advantage, a window of opportunity. Here's where things get really interesting. The Bank of Canada has cut rates aggressively. 5-year fixed mortgage rates are hovering at 3.87%, with forecasts projecting rates could dip as low as 2% by the end of 2025. If you're watching from the US or UK, imagine getting leverage at those numbers. For perspective, UK mortgage rates are sitting around 5.5%, and in Australia, it's closer to 6%. So you've got cheaper financing, lower purchase prices, and strong rental yields. This is the holy grail for leveraged real estate investing. Check this out. Calgary mortgage rate trends, 2020 to 2025. One of my clients from New York who owns rental units in Miami and Austin called me last month and said, "Calgary is where Miami was in 2010. You can still get in, but not for long." And I couldn't agree more. Supply is rising, but it's not enough. Now, you might have heard that Calgary is building fast, and you'd be right. In 2024, there were over 22,000 new units under construction. But even with that, supply isn't keeping pace with demand. Detached homes, especially in family-friendly areas like Tuscany and Mahogany, are flying off the market. Condos near downtown and the University of Calgary are experiencing rental bidding wars. And tariffs on construction materials, particularly steel and lumber, are putting pressure on timelines and costs. As one local builder told me, "We're building as fast as we can, but approvals, labor shortages, and tariffs slow everything down. Demand isn't waiting." Take a look at this chart. Calgary housing supply versus demand, 2023 to 2025. Where smart money is going in 2025. So where are seasoned investors focusing? Let's break it down by area. Seton. This up-and-coming suburb has seen huge infrastructure investment. The South Health campus is a major employment driver, and new transit lines make it a commuter's dream. Entry prices are still reasonable. Townhomes from $450,000, and rental yields are strong. Aspen Woods, one of Calgary's luxury enclaves. Homes here start at $1.2 million, and the area attracts executives and international buyers. If you're looking for capital preservation with steady appreciation, Aspen Woods is a solid play. Tuscany. Family-friendly, excellent schools, and green spaces. Detached homes are priced around $750,000, and inventory is tight. Downtown Beltline, ideal for condo investors. Walkable, young demographic, and high demand from professionals working in tech and healthcare. Condos here average $400,000 and can deliver 5% plus rental yields. And for comparison, think of how neighborhoods like Brooklyn in the early 2010s exploded in value as young professionals were priced out of Manhattan. Calgary's Beltline is showing similar patterns. Potential risks to watch. No investment is without risk. Here are 3 things I'm watching closely. Market correction possibility. If construction ramps up too fast and outpaces demand, prices could stabilize or even pull back. Economic shocks. A slowdown in global growth or energy prices could hit Calgary's economy. Interest rate surprises. While rates are forecasted to drop, inflation shocks could reverse that trend. But here's the thing. Every investor I know who's made serious money in real estate didn't wait for perfect certainty. They acted on solid fundamentals and a clear strategy. Why Calgary's fundamentals are hard to ignore. Strong population growth, diverse and resilient economy, affordable entry points relative to other major global cities, high rental yields, and a favorable lending environment. It's a rare combination, and in my view, and in the view of many of my most successful clients, Calgary in 2025 is one of the most compelling opportunities on the table. How to make your move. Practical steps for investors ready to act. So let's say you're thinking, all right, this sounds like something I should seriously consider. But where do you start? Here's what I recommend to every investor I work with, whether they're based in New York, London, or Sydney, before they make a move into Calgary. First, nail down your investment strategy. Are you buying to hold and rent out? Are you looking for capital appreciation in luxury homes? Or do you want cash flow from high-yield condos? The answer to that question changes where you buy and what you buy. Second, understand the timing. Right now, as we move toward mid-2025, we're in what I'd call a sweet spot. Interest rates are favorable, prices are rising steadily but not irrationally, and demand remains high. But as more international capital flows into Calgary, competition will increase, and entry points will become narrower. And third, work with local experts. This isn't a market you can navigate with a few Google searches. You need real-time data, boots-on-the-ground insights, and an agent who knows where the deals are hiding. For example, a client of mine from Melbourne recently secured a pre-construction condo in Seaton for $415,000, which is already projected to appraise closer to $460,000 by closing. That's the kind of edge you get when you have the right people on your team. Take a look at this chart. Projected condo appreciation in Seaton and Beltline, 2024 to 2026. Lessons from successful and cautious investors. Let me share two quick stories that really drive this home. First, there's Samantha, a British investor who bought a townhouse in Tuscany in early 2023. She was cautious, skeptical even. But after crunching the numbers and visiting the area, she went all in. Her $720,000 property is now valued at $790,000, and she's generating a 4.5% rental yield with tenants locked in for 2 years. She told me last month, "I was worried about getting in too late, but now I realize I was actually early." On the other hand, Mark, a hedge fund manager from New York, waited too long to pull the trigger on a luxury home in Aspen Woods. By the time he was ready, the asking price had jumped by $150,000, and his ROI projections took a serious hit. His takeaway? I underestimated the speed of this market. That's not a mistake I'll make again. And that's the thing. Calgary isn't moving at the frantic pace of Vancouver or Sydney yet, but it's picking up fast. Recap. Why Calgary should be on your radar in 2025. So let's step back and review the key takeaways. Population growth. Calgary's population is booming, driven by interprovincial migration and job opportunities. More people equals more demand for housing. Economic strength. A diversified economy with booming tech and healthcare sectors makes Calgary a stable long-term play. Check this out. Calgary economic growth by sector, tech, healthcare, renewables, 2022 versus 2025. Affordability. Compared to major markets, prices are significantly lower than Toronto, Vancouver, London, and Sydney, but rental yields are higher. Take a look at this chart. Rental yield comparison, Calgary versus global cities, 2025. Interest rates are still favorable. Financing is cheap, especially compared to markets like the UK or Australia, giving you a rare chance to leverage your capital. Opportunities in key neighborhoods, suburbs like Seaton, Tuscany, and Aspen Woods, plus downtown areas like Beltline, offer strategic entry points depending on your goals. Now is the time, but only if you're strategic. Here's the honest truth. It's not too late, but it's not forever either. Markets like Calgary reward those who act with insight, not impulse. If you're thinking about sitting on the sidelines and waiting for the perfect moment, you're probably going to watch this opportunity pass by. And I say that with the experience of someone who's seen this play out in cities like Austin, Miami, and Melbourne before they became the hotspots they are today. I'll leave you with this. What's your risk tolerance? What's your long-term strategy? Because if you wait until the headlines are screaming about Calgary's skyrocketing home prices, you'll have missed the best deals. What do you think? I want to hear from you. Are you considering Calgary? Have you already invested? Or are you weighing other markets like Austin or Dubai? Drop your thoughts in the comments below. I respond to as many as I can, and you never know. Your question might inspire our next video. And if you found this deep dive valuable, do me a favor. Hit that like button so more investors can benefit from this insight. And subscribe to EstateScope, because next week we're diving into the 3 best suburbs in Calgary for high-yield rental properties. And trust me, you don't want to miss that. If you're serious about building wealth through real estate, now's the time to take action. I'm James, and this is EstateScope. See you in the next one.